Assalamu alaikum. My name is Mahmoud Akbar Afridi, and today, before starting our topic, I have to tell you people that unfortunately I could not make video on my laptop. The reason isn't that I can't install that application, website, or anything. Actually, the reason is that the camera of this laptop is not as good as I'm having on mobile. So I feel better to tell you and to share my information, knowledge on this mobile with the camera of this mobile instead of using the laptop. So first of all, today the topic of our video is that like source documents and coding in accounting. Every single transaction your business makes, buying stocks, when we buy stocks, when we sell a product, paying a supplier, leaves behind a piece of paper, or these days we leave digital record in every country, every like you could say at the every end of the world there's now digital records. Very few only paper records are there. That record is called a source document. Source document, why do we call it a source document? Is because it is a source where we store information, and this information is very important information for any company. Okay, and before that transaction can go anywhere near your accounting system, it's need to be coded mean it should be like profit, how much profit have we made, how much we have to pay tax, how much being used up in the manufacturing, labor cost, everything. In this video I will break down exactly what source documents are, why coding matters, and how these two works. A source document is the original piece of evidence that a business transaction has taken place. It's the starting point of the whole accounting process. Nothing gets recorded in the books without one. Think of it as a proof. Yes, obviously, like it is a proof. If I will be buying something, I will give you a document where there will be written about everything. This is very different from receipt and everything. Okay, think of it as a proof. Okay, if HMRC, an auditor, or your manager asks how do you know this sale happened, the source document is your answer. Because everywhere in the world, even there's a hadith that if you are making any deal, you are selling, buying anything, you have to write a contract. So obviously we have to write this source document which would be original. And if anybody asks us that how can you prove that you have sell this thing, so we have to show them the source documents. Let's go through the main ones you need to know for FA1. Quotation, a document sent by a supplier stating the price they had charged for goods or services before any commitment is made. Okay, so first of all they will send you quotation, which means a paper, a document they will send to you, which will tell you about the prices and how you are going, or the service, the charge, or the money they are going to charge you for any specific product, any specific service, or anything. Purchase order issued by the buyer. We will, like if there's a person who will sell me, so I'm going to release and make the purchase order issued by the buyer to confirm they want to go ahead. It is a type of, you could say, contract which I will give to him, which will state that I want to buy this thing in this much bulk, in this much amount, and these things. Sales order, the seller's internal vision, confirming they have accepted a customer's order. This comes between the company, this is not for the other person. Delivery note or good received note accompanies goods when they are delivered, confirming what was actually sent or received. Invoice, a formal request for payment issued by the seller after good or services have been provided. This is one of the most important source documents in the whole syllabus. Credit note, issued when goods are returned or there's been an overcharge. It reduces the amount owed. Debit note, the opposite of the credit note sent by the buyer to request a reduction when we cannot afford anything very expensive. So we have to ask the company which is selling the thing to us that please give us discount so we can buy this thing easily. Receipts prove that payment has actually been done. Okay, then come remittance evidence sent by a customer to tell the supplier which invoices a payment relates to. It will be going like when we buy a thing, so we the buyer give the seller give the buyers the receipt, but in over here it will be the opposite. The buyer will give a piece of paper or document where it will be written about this thing. So there's an evidence that we have received this thing. Statement of account, a summary sent periodically listing all transaction and the balance outstanding. So this is all for today. This was the topic. Thank you for listening.